Hello, everyone. Good morning to you. I'm excited to welcome you to yet another promising session on the USDJPY. So, in this video, we shall be taking a technical dissection of the USDJPY with the hopes that we can be able to identify potential trading opportunities lining up for us this new week. Well, before I go into the details of what our expectations are for today, I would like us to quickly run through the key moments that we had last week, since this is going to be a follow up detail to my previous analysis. And talking about last week, we had a chopper situation at the beginning of the week as we saw some buys and sells. And not until on the 7th, that was on Tuesday, that was when the Fed chairman was doing his testification before the Congress. And you all know how that went by. His statement was quite hawkish, and this led the dollar to rise significantly well during the first half of last week's trading session. As you can see here, we had an opportunity after citing the breakout retest of that bearish trend line here, which I told us that buy pressure continues, we want to be adding more position, had the breakout of that 136.00 level. And this went on, as you can see here. Hold on a second. This was the first initial sell momentum that we witnessed at the beginning of the week, though we were taken out immediately as price action didn't move significantly well. And not until Tuesday here, we anticipated the breakout of the 136.00 level, which finally happened during the session of the Fed chairman. Then we saw price action break out of the 136.200 level to trigger another buy position from this current market structure. And we were able to rather move all the way up. I updated here where I said the Fed chair is currently testifying secure all buy position just in case price action may go the other way around. And this is what we had. We also expected another breakout of the 137.00 level here, and that happened, and we saw breakout retest to structure triggering another position. So as at Wednesday 8th of March, we were able to scoop about over 350 pips in profit with three positions running at that point. Then on Wednesday morning, we begin to see some decline in that bullish momentum, and we look at what we saw here. And a couple of hours later, I shared this on I think during our live session on Wednesday, I told us all to be in anticipation of a breakdown of the 137.500 level, and we rode the move all the way to the downside here. And that was how the week went by. We had some selling opportunities which continued to break down the 136.00 level. And this was how it all went by. If you do want to have an examination of how the trade for last week went by, I will be dropping the link in the description box below. And if you are watching this from my YouTube channel, you will definitely be seeing the link to this commentary at the top right hand side of your screen. So with that being said, let's dive into the current market structure as we take a technical dissection of what our expectations is going to be like for this week. Well, the first thing I normally do in this kind of situation is to check the daily time frame for an holistic perspective of what is really going on in this market. And in fact, I have laid much emphasis on this current setup in my previous video. I would advise that you watch my previous previous analysis on the USDJPY to get a better perspective into how we got to this current position on the daily time frame. Now, I will be zooming into what has been happening here in the last 4 to 5 months, and that's since the month of October last year. We saw the situation here where price action continued to find lower highs, and as a result of these, I was able to identify this bearish trend line to further emphasize the strength of the sellers at this particular point in time. However, a couple of weeks ago, I think 2 weeks ago, I guess, 2 or 3 weeks ago, we saw the breakout of that bearish trend line here, which also shares a beautiful confluence with the 135.00 level. And with the situation we have here, we are looking forward to price will be continuing to the upside since the breach of that bearish trend line is a beautiful signal that the trend line may no longer have the capacity to continue to hold that bearish momentum. And in the last couple of weeks, and since the breakout of the 135.00 level, we have seen a situation where price has been consolidating, falling within the range around the 138.00 level and the 135.00 area, which obviously is right above that bearish trend line. And we all know from a technical standpoint, whenever we do have a significant breakout of a structure such as the bearish trend line we identify here, from a technical standpoint, we expect that one point in time price is likely going to come back, do a retest of the trend line in anticipation of another wave of bullish momentum. But with the situation we have here, we need to be very, very careful, as we all know that from a long-term perspective here, at least in the last 4 to 5 months, price action has been bearish, and there is a chance that we might be seeing the breakout here turn out to be a false breakout. So these are the things we are going to be looking at as we go scale down into the lower time frame. So one of the perspectives we might be looking forward to this week is price action might likely come back to retest the bearish trend line in anticipation of a bullish momentum, or we will see price action continue to drop to the downside, breaking down that trend line to continue the sell momentum to the downside. That is one scenario we could see here. And another thing that could happen is the fact that price action could probably respect the 135.00 level. That is, if we start seeing buy pressure above the 135.00 level on our lower time frame to incite another wave of bullish momentum from this current structure. And to further emphasize the importance of the 135 level, there is a trend line here with price action has been at one way or the other respected, probably at the form of a buying momentum or selling momentum at one point in time since the beginning of this year. So we might likely see a situation where price would respect that trend line one more time to incite another move to the upside. However, if the breakdown of that structure happens, I told you we might be looking out for selling opportunities. So we need to really understand what's really going on around the 135.00 level in order to make a decision for the new week. So I was able to figure out some couple of simple setups that we can use to anticipate a trading opportunity during the new week. But before I go into the details on that, it is very important that we look at the economic calendar as we have the week list with a couple of macroeconomic events that will definitely be bringing liquidity, which we need to move price action in whatever direction we are positioning ourselves for. So with that being said here, I will be zooming into the economic calendar here as I was able to spool out events that will be focusing on the um hold on a second, that will be focusing on the dollar and the Japanese yen. Now, the first event for the week comes up on Tuesday, that is March 14th. And look at what we have here. We have the consumer price index. We have the Bank of Japan monetary policy meeting minute coming up on that same day. Then on Wednesday here we have the retail sales, which has some level of negativity for the dollar here. As you can see, if you compare the previous data with the expectation for this week, you can see that it has been on the negative side. Now, with the situation we have here, we want to see how the market is going to be reacting or anticipating this event. Then on, okay, we don't have anything on Thursday. So on Friday, 17th of March, we have the Michigan publication, which is going to be publicizing the consumer sentiment index for which is going to be affecting the dollar as well. So these are major events we are going to be looking forward to for this week. So I will implore that we put all this in our diary so that we can anticipate and position ourselves. And obviously, we shall be seeing the reflection of this anticipation on the chart as price action. So with the information we have gathered here, I want us to scale back into the chart as we dive into the lower time frame, where I told you I've been able to identify a simple setup which I think we can use to guide our trading activity for this week. Now, if you look at the 4 hours time frame here, let me zoom out a little bit so that we can see things more clearly at this particular point in time. You will see that since the month of January, price action has actually been bullish on the USDJPY. And to further emphasize the strength of the buyers in this particular market, we have seen a situation where price is caught within an ascending channel, which further emphasizes the strength of the buyers in this particular market. Now, if we zoom into what has been happening here since the month of February of this year, this is what we're able to see. You can see what has been happening as soon as price got into the resistant line of that ascending channel, which you can see here. You will see that price has been sellers has been negating all attempt by the buyers to even break out of that structure, and this lasted about 2 to 3 weeks here, as we saw something that looks more like a reversal pattern, with the neckline area of this reversal pattern falling just exactly at around the 135.800 level, which has actually been a very strong demand zone in this market for over 2 weeks. And during the later part of last week's trading session, we finally saw the breakdown of that demand zone here, which is more or less a beautiful signal that we are going bearish in this particular market. But we are not going to jump into conclusion as such at this point, as you would remember that we are within a strong ascending channel which has lasted for over 3 months now, and we need to be very, very careful at this particular point. So now that we are heading into the new week, how are we going to be using this current structure to guide our trading activity? So we have 2 key levels here. We have the 135.800, which was initially a strong demand zone before the breakdown happened here. And we also have another one at the 134.00 level, which has been a strong demand zone during the month of February. And as you can see, since then, price has been trading above that structure. Now, with the situation of things right now, look at the 134.00 level. It shares a beautiful confluence with the support line of that ascending channel, which if price action start finding buy pressure around or above the structure, it might be a good opportunity to join another wave of bullish momentum. However, if we do have a breakdown of both the 134.00 level and the support line of that ascending channel, I will definitely be looking out for selling opportunities in this particular market. So that is the situation we have here using the ascending channel to guide in activity. Now, one thing I also want us to call our attention to here is the sharp rejection of the zone. As you can see, this candle here, this wick, the wick of this candle here looks more like a sharp rejection of that area, which from a technical standpoint is a sign there are still some traces of buyers in this particular market. So we need to be very, very careful here. So at this point, I will be using the 135.00 level as a yardstick for trading activity for this week. Now, how do we use that? Since price action is around the 135.00 level, we want to see how price action will be reacting to the structure to decide if we are going to be buying at this point or we are going to be selling at this area. Then, in addition to the 135.00 level, is this bearish trend line. After we connected the series of lower highs here, I have this temporary bearish trend line, which I'm hoping that it will be guiding our bearish momentum to the downside. So if price action comes back to do the retest of the 135.800 level, which was broken during the later part of last week, as you can see, it also shares a confluence with the bearish trend line, and selling pressure resumes around that area on our lower time frame. Will definitely want to be joining a decline to the downside. However, a breakout of the structure will negate the strength of that trend line to incite another wave of bullish momentum in this market. I'll be pausing the video at this point, but I promise you that I will be jumping into the comment section during the early hours of the new week to give you an update on what my expectations are after monitoring how participants in this market will be reacting to the current structure where market is at this point to decide what our next line of action will be. I hope this video has been of immense help in making your personal decision on the USDJPY for this week. And if it truly did, please support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, as we get prepared for the new week. And also, you will be able to be part of my daily commentaries in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.